Good afternoon, everybody. Going to go over our Forex trades for today, Monday, December 21st. Hope everybody had a great weekend. Slow day, going to be a slow week as many head traders are off their desks for the last 2 weeks of the year. I mean, there might be some action here or there. Don't expect too much. We did have 2 trades. They were both swing trades. We pulled out 7 pips on a size-adjusted basis. On a non-size-adjusted basis, it's about 70 pips. As far as economic news this morning, the Chicago Fed National Activity Index came out with a miss. They came in with negative 0.3% contraction. It plunged to 6-month lows, and this just a few days after the Fed raises rates. So we've been saying all along, and I don't want to rehash it, but we've been saying all along the only reason the Fed should be thinking of or even raising rates is to normalize them and create what we call good inflation, and let the market get hit, let the dollar rise, let the stock market get hit. Maybe the economy takes a little dip, but it'll be temporary and things will come back much better than they are. Instead, the Fed is insisting that the economy is so strong, profits are growing, and that they need to raise rates to slow the economy down, when it's absolutely not true. We know that from all the numbers that come out from the government and other sources, and we also know that the rest of the world is slowing. Chinese economy is cratering. Countries in Europe, some countries throughout Europe are on the edge of deflation or are already experiencing deflation. Japan's in deflation, so there's no growth around the world, and that's as simple as that. Citigroup came out with a piece over the weekend, which was very interesting. They said that the title of their article was "The Fed's Alarm Clock Went Off 6 Hours Too Late." They basically said where the economy is now and when the Fed should have been raising rates was not where the economy is now. Where the economy should have been when the Fed was raising rates was about 2:30 if you were to look at a clock. And they said the alarm went off at 2:30. The Fed hit snooze so many times that the alarm stopped working, and the Fed didn't wake up till 8 p.m. So there are, the Citigroup itself is, at the end of the article, they basically come out and say that they expect the Fed in 2016 to reverse course from raising rates, lower rates, now that they've proven that they can heroically raise rates, they say in the article, and that they expect them to lower rates and possibly even go into negative territory and come out with a QE4 and possibly QE5. So it's just it's only Citigroup. It's one firm's opinion. I understand, but if they're not going to normalize rates just to set an example for the rest of the world and to create that good inflation and try to convince other countries to follow suit, if they're not going to do that, if they're going to raise rates and continue to insist that everything is so strong, they're making a dire mistake, because it's going to not only impact, as I said before, the dollar, equity prices, and the economy. It's also going to impact the people of their country, us, psyche. So, people are going to say, well, here's the government telling us things are so good, but I can't get a job. I can't find a job. What's wrong with me? And that's not a way to create excitement and stability in your economy. It just isn't. They should just be straight out and flat with us. So if they're going to go down that road, as Citigroup believes, Citigroup just really honestly believes that they're going to reverse course in 2016, that we may not see another increase in rates. It would be pretty interesting to see what happens. Market sold off Friday, back up a little today. I don't know if the market selling off Friday was really anything that had to do with the Fed, maybe more on oil. You had oil selling off Friday. You got oil selling off today, but yet markets are up. So and you really can't gauge this next 2 weeks when you see market, whether it goes, stock market goes up or down, even with the dollar, if the dollar is going up or down. It's really not a good 2 week period to gauge at all, because the volume is going to be light. Volatility could be a little heavy, because the volume's light. But, do you want to get involved in that as a trader? I'm not too sure, because if volatility is great and volume's light, it's tough to get out of positions and tough to get into positions. So, you have to kind of tread lightly. So with that said, we did have the 2 trades, but they were swing trades. They were actually liquidated late Friday morning, Friday afternoon. So they'll be on today's action. So we'll go over them here. The first one you're looking at here is New Zealand dollar Japanese yen, which we were short from 82.034. You can see what it did. We were looking for a bigger move down. We had a couple of chances to cover around 81.20 or so. We were expecting it to get down to 81 and even break 81. Again, you only have 10% of normal size, so you're not going to be piecing out of this. And then it rebounded pretty quickly. And as it started to roll over again, that's where we ended up getting out around 81.559, picking up 47.5 pips, or 4.7 on a size-adjusted basis. So we'll take that. And in Aussie dollar, we were long this from 71.05, just ahead of the figure. Our thoughts on figures. They could act as some support or resistance depending on what it's doing as a psychological level. I mean, this is a perfect example. It acted as support, and look what it eventually does. Makes a run up to the next figure of 72, which acts as resistance. So they're big psychological numbers when it comes to even numbers. Not that you trade solely off of that, but our analysis and our algorithm was giving buy signals just ahead of that 71 figure. So we grabbed it 71.05, had a chance to get out around that half figure, didn't take it, ended up, as it consolidated and tried to break out a little bit, only picked up 23.2 pips or 2.3 pips, but better than losing for sure. And then a matter of a couple hours later, it finally popped, ripped through late Friday, and made a run up to the figure of 72. Like I said before, it acts as resistance. So it had pulled back down to that 71.50 level. So obviously 71.50 is acting as somewhat of a magnet. We'll see what it does there. But in the end, we'll take it. 2 trades, 7.0 pips on a size adjusted. Non-size adjusted is, like I said, about 70 pips. So we'll take the 2 trades for sure. We'll move on. Nothing else really this morning. No scalps this morning. Again, like I said before, we got to trade a little, tread a little lightly with the holiday 2-week period here. So we're going to wrap it up. If you're still trading now, good luck. If any signals come out, to be coming your way, and we'll be back tomorrow, assuming we get some action tonight and tomorrow morning. Have a great rest of your day.